All right, folks, welcome back. This is our weekend commentary for January 14th, 2022. As a reminder, there is no video for the 13th of January, 2022. I mentioned on Wednesday that I'd be requiring my own personal time that day. So you're not missing anything. It's not popping up because of some kind of technical glitch. It wasn't a video like I mentioned on Wednesday. All right, so the weekend commentary here, I'll try to get through this as smoothly and quickly as I possibly can. The daily chart of the dollar index, as you can see, we had traded down into our imbalance. I was looking for that on Wednesday's trading from Tuesday's commentary, and we traded down on that on Wednesday, went through it. Yesterday on Thursday, we traded further into the imbalance. I mentioned it would be most likely the draw if we went through this imbalance here. Look here, and we got that. And then we had a retracement back up into this area here. I mentioned how if it would have went below it just a little bit, but not too much, not down to here. If it goes into this, that would be less likely to see a sell, especially with the number of days left in the week at the time of this breaking down on Wednesday. So Thursday's trading continued heavy, as I mentioned, and probably would stay heavy, and we got that. Then the retracement right back up into our mysterious support and resistance level. I'm obviously being facetious, but you can see obviously this is the real science behind support and resistance. All right, so let's go into the hourly chart. All right, you can see we sold off here on the 12th, as I mentioned, at the discount low of an old imbalance. Go back and look at the commentaries. It tells you what this is. I didn't add it for lipstick. It's been there. Broke down, traded into Thursday's deeper retracement into the imbalance down here. Didn't quite get down to the low. I would have rather seen it obviously hit that, but it's okay. It rallied, took out short-term high, and a short-term high on the 15-minute time frame right here, which we'll look at for our break in market structure, back into our mysterious support broken turn resistance in the form of a fair value gap. If it remembers that, goes right up into it, hits it bang on, and completes the trading session on Friday at that high. And you can see here, just a beautiful delivery. I mean, how can you not be fascinated with this type of delivery? It's just beautiful. So we have a short-term swing high here. After failing to get down to that low, it rallies aggressive. So it shows displacement, breaks a short-term high. We're on Friday, so it's likely to have TGIF return back inside the range, and look up TGIF in the forum search window, and you'll find what TGIF is, and it's a retracement pattern for Friday specific. Buy side and balance, sell side inefficiency, order block, right here, the biggest down closed beefy candle. Extend that out in time with a fair value gap, and time of day, it is a Friday likely reversal because we got almost down to an objective we would have looked for anyway, as I mentioned, but we rallied up, broke market structure, and then we had buy side liquidity here, here, and then that old level back here I mentioned that we could possibly trade back up into, but I'm not interested at this point here, obviously, but it becomes an upside objective. So optimal trade entry in here for the dollar index, and the market enters a buy program. Small little fair value gap, bullish order block hits that as well. A little sloppy in here, and then we have a rally, and then finally reaching up into the old discount low on the daily chart. All right, so we have, oh, by the way, when I said discount low on the daily chart, that is, again, the discount low of the fair value gap once it was broken to the downside. All right, euro dollar. I mentioned that we would probably trade up into this order block. We got that. Outside of just filling in this area here, I said I didn't really know what to expect beyond that. And you can see the body's pretty much respecting the order block, but we did spike through with some errant price action, cleaning up the highs in here, this candle here and this candle here, and then getting in this little imbalance there. So once it hit that, back inside the range of this SIBI. So not a bad little week, even though it was in the time frame I'm not personally trying to trade it, but at least it was nice for me to be able to share it with you before it happened and outline what it would likely reach for. So bullish order block, we've seen that outlined on Wednesday's video, but just really nice delivery for just a small little volatility play. All right, Eurodollar hourly chart. You can see how we, again, rallied up through that on the 12th. On the 13th, had a small little spike above, consolidated, found some support. One more time, spiking above relative equal highs, and then giving up the ghost, trading lower. Bearish breaker, hits it, sells off. Almost got down into this area here. I think we'll still likely try to move into that level and maybe clean up some of this as well. All right, 15-minute time frame. After running relative equal highs here on a Friday, displacement, fair value gap, trades up into consequent encroachment there, and rolls. So we have an optimal trade entry for London session, relative equal lows. It trades into that. Small little fair value gap it hits that, reclaims that fair value gap there. Boom. See it? Breaks, consolidates, small little fair value gap in there as well. Fills it in here to consequent encroachment there. Why? Because these are wicks. They act like gaps. Okay, so consequent encroachment on institutional order flow. Don't look for the full fill because we have wicks in here. Okay, that's the logic I teach. And it breaks lower. And again, I would have rather seen it trade into that. That was really what I was watching intraday, but just didn't give it to us. It looks like it might try to get down into that going into Sunday, Monday's trading. So we'll see what we get. Pound dollar, daily chart. Got up into our bearish order block, completely closed that in. I said that was pretty much it. Outside of that, I don't know what it's going to do. And pretty much ended the week there on Thursday. Hit it, went through it just a little bit, and then fell off back inside the buy side of balance, sell side of deficiency. Pound dollar hourly chart, again, working in that range. Optimal trade entry in here, a little bit higher than I would have rather seen. I don't like the idea of that, but I like this fair value gap here. Once it breaks down, then it becomes a inversion level. So really nice there, and once again there, and then sells off, works towards the buy side of balance, sell side of deficiency there. Consequent encroachment from this candle's high and then this candle's low. Split the range. Boom. Hammers that pretty nicely there. And the 15-minute time frame. Old fair value gap extended out in time. Trades into that. Wait for a market structure break. Swing low is here. Breaks down. Displacement. Beautiful. Runs up into that. Mean threshold. Fair value gap. Overshot, but back to mean threshold, and breaker, bearish breaker, sells off. Relative equal lows, low resistance liquidity run signature, higher low to the right than that of the left. Heavy distribution. Optimal trade entry as well, sells off. A little sloppy in here like the other pairs were, and I don't like so much that, but nonetheless, it consolidated, broke lower, working inside of the buy side balance, sell side inefficiency here. So from this candle's high and this candle's low, we overshoot the consequent encroachment, but based on the higher time frame hourly, it looks a little bit cleaner for consequent encroachment there. And retracement back up in towards the close of the day. All right, so I promised you two visualization of trade framework. And I kind of switched up a little bit today because you guys were very patient with me. I needed to take care of some personal matters with taxes and such yesterday, and it always sucks. But it is what it is. The idea is I'm going to give you two bearish ideas. And then like I've given you for the previous three that were all bullish, and you just flip the logic for shorting. This first one of two, both being bearish frameworks, I'm going to give you, obviously, a day trade and short-term setup, and then I'm going to give you a swing trade framework, okay? And I'll tell you what these markets are so you can go in and take a look at it, because I have the benefit of actually using the actual price action here instead of drawing out the hand-drawn charts, which it was monotonous. I was like, why am I even doing this? Why don't I just take the charts and just screen capture. I mean, that was nuts. But yeah, I wanted to add some creative flair. Okay, I mean, I want to be able to share my interest in well, a labor of love. You know, I could have done it this way for the other ones. I could have easily done that, but you would have looked at it and said, well, you know, what's the big deal? But because you've seen the labor of love of me putting in the effort of drawing out the individual candles, hopefully you would appreciate it more. I know I'm being honoring here, but all right, let's go into the setup. All right, the framework here is a 60-minute chart. Okay, so the idea is you've expected the market to reach up into some kind of premium array. Okay, it should warrant a reversal of sorts, and you wait for the market to provide you confirmation. Okay, so up here on this high here, that very well may have been a return back up into an unbalance, like a SIBI being filled in, or it may be running on an old high when it's bearish. Maybe SMT divergence did not confirm this. And just so you know, this market happens to be the E-mini S&P March contract for 2022. And it's the hourly chart. So that way you can kind of get this framework here and take a look at what's going on. And it's also the reason why I didn't include the indices, because once you do that homework and you study what it's done here and how it delivered there, and I don't need to do the indices now, do I? Because you've looked at the chart too. So 60-minute chart, E-mini S&P, the symbol is ES. H as in Harry, 2022. Okay, and you'll get that on TradingView for the 60-minute chart. And if you study it, you'll see that this here, on the hourly chart, we have a fair value gap here, a breaker there, and because we're trading inside of the breaker, this can be both a institutional order flow entry drill or a fair value gap. Okay, it just happens to be a partial fill to consequent encroachment here, but the breaker is really the main one. We're looking for the breaker to kind of like be the main catalyst here. So if you have a breaker that's bearish and you're expecting price to run up into it, just know that we probably won't fill in that gap. We want to see a little piece of that left open, and if you go through your notes, that's not just cherry picked here. It's also what I said in the past when it relates to fair value gaps or potentially institutional order flow entry drills with a breaker. Okay, breaker is kind of like the parent PD array. It's going to be more important. So it's going to draw back up into that, especially if it wants to pick up more liquidity. And that's obviously what we're showing here in the 60-minute chart. So the framework on the 60-minute chart is we expected some kind of bearishness. We have a market that breaks down here on this candle, takes out the low, and then we turn into a bearish breaker. And then with that idea, that run up into the bearish breaker also overlaps with the institutional order flow entry drill. That's what you're trying to see as an entry point. And you're looking at this low down here. What's the discount? Sell side liquidity. What's resting below that? Buy side imbalance, sell side inefficiency. So it's likely to rebalance here. Also target liquidity as well. So if they want to sell short here, and maybe they sold short here as well, obviously, you know, with the benefit of hindsight, the market breaks down. We know that this is a likely scenario for another entry going short. So your framework is trying to get short here, selling short, looking to buy back below to the sellers below this low here, and maybe dig into this imbalance. Okay. On the 15-minute time frame, this is what it looks like. We have a market that breaks lower here. We have, again, a sell side imbalance, buy side inefficiency. That candle's low, this candle's high, consequent encroachment. Remember the likelihood of this not completely filling in on the hourly chart because of the breaker. So institutional order flow entry drill with the bearish breaker, you're going to sell short there. This happens to be the afternoon trend or session, 2 o'clock to 4 o'clock, and you'll find that on your own study of the E-mini S&P. I know some of you are like, can you just tell me where it is? It's important for you to go study it. Okay, if you're watching these videos on a more timely basis, preferably at the time I'm recording them and putting them up on the forum, it's going to be really easy for you to find this in the data. Okay, so this is a 15-minute chart. You can see we sold off from here, and again, targeted that imbalance that's over here on the 60-minute chart, there. Now, the framework is a day trade to short-term setup. So you're looking at all these factors to provide the catalyst and framework for your setup. Some of you may look at this and say, this isn't really my cup of tea. This really isn't going to butter my bread. I don't like this one. It doesn't really resonate with me. Others in here may say, man, this is exactly what I'm looking at. I've been looking at this pattern for months. I can see it. This is making sense to me. So it's a matter of preference. It's a matter of what fits your personality, what PD arrays make most sense to you. They all make sense. They're all valid. They're all useful. But not everybody's going to agree on a framework that makes a setup viable to them. Okay, so that's one of the beautiful things about trading. And it's amazing. It's almost like a paradox. You have the opportunity to frame a unique analysis concept that leads to you deciding whether or not you're going to execute in the marketplace. And there's so many variables. It makes it feel like, as you're learning, there's only going to be one way of doing this. There's only one profitable way to skin a cat. What's the one that ICT uses? Because that's the one I want to do. I don't want to monkey around with anything else, because if he's using that one, then he's pretty much filtered out all the other ones, when that's not the correct way of interpreting and seeing what it is I'm teaching you. Finding a method and trade framework that leads to a model that is uniquely linked to your personality and your psychological makeup, that makes sense to you, is crucial. That's the secret ingredient to finding consistency, because I can't press you into a mold. I can't take you and beat you up for 12 to 18 months and say, here's what you need to understand and learn. And then like dough being rolled out on a countertop, and then take a cookie cutter, which would represent like a model, and then start pressing that into that dough and then say, okay, now I'm shaped you into the model that I want you to have. And you're going to have to just comply with that. It doesn't make sense. That's flawed logic. What I do is I teach you how to go in and find your own niche in all of this, finding it where you personally can feel comfortable with the idea, see the framework, the logic, and trust that these will repeat. Now, the problem again is new students that have not really been with me for a while anticipate and expect, with unrealistic expectations, that their trading framework or a model must deliver every single day a setup, or it's flawed. And that, my friends, is flawed logic. You're submitting yourself to a scenario that is going to repeat, but because it relies on certain criteria that you agreed to for your unique model, you must submit and wait for that to set up. And that's where discipline and responsibility are huge. They're paramount. And think about it. Does a new trader, a developing student of anyone, not just me, anyone, can they be expected to be responsible and patient? It's not likely to occur. That must be forged over doing repetitious drills, study, backtesting, and then eventually executing with a demo account for a number of months and working out those kinks. So don't look at any of these individual trading frameworks and say, well, that one's not my thing, so it might not be a good one because I don't see it working for me. Because there may be a number of you that gravitate to the very one that if you yourself were in a room and said, I didn't like that one, someone else may speak, hey, I've been doing this with that particular framework for months or years or whatever, and they're able to find consistency. And this is all they look for. So for a day trade to short-term setup, now what's a short-term setup? Anything over 1 day, or in other words, holding overnight. Okay, short-term trade would be represented like that in my mind. A day trade is obviously getting out the same day you enter before the rollover into the new day. Framework is 60 minutes. Logic is likely to reach down here. The pattern of entry is here, using time of day, afternoon session, if it's going to be the stock averages, which this happens to be. So we're seeing a breakdown earlier in the day, and then we have the 2 o'clock in the afternoon continuation, and then we have a break. Then it consolidates, goes into another new trading day where there's a retracement back up into a bearish order block, fair value gap. And if you're going to be doing short-term trading, you do not rush your stop loss and start trailing it down. You want to wait for a swing low after retracement, because obviously we know that accumulation, distribution, and manipulation takes place with power 3. So if it's bearish, we're going to anticipate a market that may Judas higher. So you don't want to be premature about trailing your stop loss down if you're going to be using this model or framework for a day trade to short-term trade. So you can do kind of like a double tap scenario like I taught on Davey Pips, where one trade entry is used to take the day trade, and then the second portion is held, and then you look for it to drop down into your target, but you do not rush your trailed stop loss. You don't jam it down. You wait for it to present an opportunity to create a potential high of the day on the second day of the trade that you're in. And then once it delivers, obviously, you're out. But it requires obviously more understanding about stop loss management, which I teach that in charter level and also in the price action model. So I give you a lot of details there. All right, here is the second one. And this is a bearish framework. And the idea here is you're looking at a daily chart and you're looking for a daily swing trade. So you notice we have relative equal lows here. The market's bearish. We're expecting prices to dig deeper on the daily chart, attack the sell side here, and advance and accelerate maybe into this area here. So that's your framework for the daily chart. Specifically keying up on the return back into this fair value gap from this candle's low and this candle's high. We trade back up into that. We would expect the market to start to break down on the next day, and we would look for, since it's going to be a daily swing trade, we're going to be utilizing the 4-hour chart. So on the 4-hour chart, we can see zeroing in on the next day after this candle here. This high is here, and to show you what this is, and you can study it in further detail, this happens to be the bond market for March 2022. And the way you would pull that up is the letter Z as in zipper, B as in boy, H in Harry, 2022. All right, and if you look at the ZB exclamation, or in other words, if you put in the symbol ZB in TradingView, click on it, it's going to say Treasury bonds, 30-year Treasury bond or something to that effect. Click on the main name for it, and then click the top selection. So you're not really clicking the March delivery contract, but I want you to compare and contrast the front month continuous chart that TradingView puts up, which is what I'm showing you here. Okay, that's what this is. That's why the chart looks real clean. Then compare that with the March delivery contract, which is ZBH2022. Okay, and rewind the video and you'll hear me say those symbols again. But this candle's high here is here. It breaks down, retrade back up in. This is the 3rd of January. Okay, 3rd of January. So we have bearish order block here, hits it perfectly, and you'll find that, and you see it on your TradingView chart. And we have all this SIBI here. Now, it doesn't look like a SIBI because it's a 4-hour chart, but if you look at this entire decline here, all of this is a sell side imbalance, buy side inefficiency, and trading back up into a bearish order block, which is also an optimal trade entry. So we have high, low, retracement back in, optimal trade entry, and then we have a bearish order block here. So this candle here opens up. We trade back up into that right there. That would be your entry. Your stop would have to be above the rejection block and or above consequent encroachment of this candle's wick. Okay, that's where you'd put a stop. And you'd expect these relative equal lows to be traded through and accelerate through it, and then reach down into the old low, which is over here. Okay, in the 4-hour chart on that bond market, and you'll see it delivers just like this. Okay, so I know some of you were emailing me, can you just give me a framework that makes sense on a little bit higher time frame? I don't like all these intraday. Okay, well here it is. It's very simple. You're just looking at the logic with a lot less moving parts. Now you can refine this and get it down to a very much more refined entry point, but it requires, again, time of day and the kill zone ideas. Okay, like the 7 o'clock in the morning to 10 o'clock in the morning New York kill zone. Why? Because it's the bond market, and bonds are very, very busy between 7 o'clock and 10. So, and very, very busy around 7:30 to 8:30. So if you are looking to be a bond trader, look at the 3 bonds that I teach you to use, the 5, the 10, and the 30 year. And look at that bond triad, the interest rate triad, and start looking for potentially SMT divergence in all of this turning point here. You want to compare the highs and start looking for that as a potential SMT divergence to support this idea here. And then once you put the trade on, you just let it rip. You don't try to monkey around with it too much. Leave the stop at your entry and then wait for these lows to break, move it to break even, and then maybe if you have enough to take something off with a partial, then do that. But you don't want to do too much with a swing trade, because moving your stop too aggressive, too fast is one of the easiest ways to get knocked out of the marketplace. And then once it starts moving in your favor again, chances are you probably don't have the experience to have gotten back in to that trade, and it's very frustrating. So if you're going to put the trade on, use the logic you used when you put the trade on initially and just let it run. Okay, and just try to reduce the stop without trying to capture a profit. That's one of the really important things about swing trading, is try not to feel like you have to lock something in. It's more about removing the risk and reducing the risk, and then letting it try to reach towards your objective, which makes it very difficult for me personally as a trading approach. That's why I don't submit myself to this, because in the time period of each one of these individual 4-hour candles, I could find dozens of trades in all of this. So when I say things like that, it sounds like I'm trying to convince you not to be a swing trader, when it's not the case. I'm just showing you from my personal perspective why it doesn't fit me from a personality stance. I tried very hard to do this style of trading when I was a commodity trader back in 1992, 93, 94, and it was very stressful for me. It was really, really stressful. I couldn't get myself to agree with that time frame and that hold time. There's so much time in these types of trades that my mind's back and forth 1,000 different times inside of 5 minutes. So let alone holding on to it for days, which is what you see here. This is several days of movement. And then eventually, if you look at the daily chart, we run right through this really nice and pretty deep too. So it's a couple $1,000s per contract from that entry there, getting a run below here. And this is something that you've been taught. Like, this is right out of core content. It's something that you expect to find. And if I was to tell you this was not a daily chart and say it was a 15-minute time frame, you would expect this entry here to sell off, right? It's a fair value gap and reach for these relative equal lows on a 15-minute time frame, if that's what this is. But it's not. It's a daily chart of the bond market. ZB, the continuous chart on TradingView. So ZB, the symbol, when you click on that, click the main header for it, and then use the first symbol. I think it's ZB exclamation point, something like that. It's the continuous chart, front month chart. And you'll get this chart as you see here. But this same logic that's being used when I'm teaching you the intraday price action and how to read the tape and look for institutional order flow, isn't it trading back up to this? What is that? This candle right there. Bearish order block. And we have a fair value gap. So it's trading right up into that there. Boom. Hits it right there. After closing in the fair value gap, wouldn't you expect? How many examples have you seen me do this when I was doing tape reading or trading and calling the market and writing out the annotations before it happens in the chart, typing it out so that way you know it's being done at the time of the recording, not after the fact as an afterthought. That's where you expect that order block to send price lower. When you look at your bond chart tonight, or hopefully over the weekend, you'll see that this is it. It trades lower and aggressively sells off like it does here on a 4-hour chart. And it doesn't take very much time for it to deliver to these relative equal lows after the market has shown a willingness to go lower. We have a high here, we run through it, and it creates a short-term low here. It breaks market structure there. So now you know that this rally here, expect that to be a suspect rally. Then when it starts to break lower, you have another double confirmation. We have a swing low here, another swing low broken. So we have a larger swing. See how many times you have to wait for these types of events? I don't have time for that, folks. That's just not me. It's not my cup of tea. I don't work that way, okay? I can see the setups that help me frame short-term day trading and those types of things. And this is the logic I would use to use setups for entering intraday and maybe short-term trading. But to get in here and try to hold on to this thing for several days. This is no way. I can't do it. I can't. There's too many other opportunities for me, like a dog chasing cars. That's me. I don't know what I'm going to do when I get every single one of the trades in front of me. I might pick this one or that one, but the point is I can't bring myself to sit still and submit to this. So even though it sounds like I have incredible patience, ICT's got incredible patience. I don't have incredible patience. I have opportunity. Okay, I have an insatiable desire for opportunity, and because I'm very, very hyperactive on these lower time frames, I just know I have a lot more choices there, and I don't want to be forced into, well, this is all you can get on the daily chart right now, and then when you don't have it, you got to wait. So this doesn't work for me. But some of you are more inclined to trade this way because your pace of making decisions is a lot slower. And that doesn't mean you're less intelligent. In fact, it probably means you're more intelligent, that you're more patient, you know what you're looking for, and you're not rattled by the fluctuations of 1 or 2 days that would may otherwise go against your trade. It doesn't bother you because you're submitting to a higher time frame idea that is going to trade down here, even if you have 1 or 2 days that go against you with up closes while you're short. It doesn't spook you out of it, okay? For me, I might be in those days that are going up, buying long, and it's really, really hard because I had a system in the 90s that I created, which I dubbed as Trident. Now, Trident is like a 3-pronged approach where I'm trying to swing trade like this model here, or trade framework, one direction, and then I may be short-term trading against that when it's appropriate to do so. So in other words, say I'm short here on a swing trade idea, then I might short-term trade 1 or 2 days, bullish in this. And then I may day trade and scalp both sides of the direction. So that model is extremely, extremely busy. But the weakness for me using it was these higher time frame swings. I would not find comfort in holding on to those ideas because so many fluctuations and changings of my mind about doing the short-term trading against this directional bias. And you're probably thinking, well, why would you do that? Because in the 90s, I was a cowboy. I was trying to do everything. I wanted to be in everything. And I wanted to figure out what caused these markets to turn and why they would turn, where they turned at, when it would happen. So Trident was something that I was using in commodities like the currency futures, bonds, and index futures. But it beat me up psychologically because this time frame, this is the one that caused me to second guess a lot of the intraday trades that resulted in losing trades, because I would look at this and say, I'm trading against that higher time frame trade. And what happens if this is the reversal? You see what I'm saying? What happens there is every time I was trying to buy a short-term low and get a retracement, it would look so good sometimes on the lower time frame. Back in the 90s, when I didn't know enough, but thought I knew everything, these ideas would creep in thinking, probably actually buying the low. And hear how the ego was creeping in. I'm buying the low. Why am I holding on to that swing trade? I got to get out of that. And then I would collapse the swing trade. And then the short-term trade, I would hold on to too long. And I would marry that idea. And then the longer-term swing trade bias would kick back in, go lower. And I would give up the position that was profitable if I would have held on to it. But I spooked myself out of it and talked myself completely out of the idea. So I no longer try to do those multiple time frame things anymore, especially I'm older. My brain doesn't fire, like it used to when I was younger. I'm very indecisive when it comes to higher time frame positions, but I'm very decisive in the lower time frames because I know I'm looking for. I'm more refined. I know when I'm looking to avoid certain things and times of the month and years and all that. But I'm more mature, and I can look back at those times and tell you with honesty what I felt was superior ability was actually me creating personal handicaps that were going to be problematic and stunted my growth. So don't think that you should be in here trying to adopt that type of mindset where you're trading multiple time frames, short swing and then day trade long against that, because it's so. I'm not saying you can't. I'm just saying don't be surprised if you have adversities with doing that, because it's, to me, I had really good runs where it was amazing. Like I was impressing myself. But then, then these instances where, because I'm going in on these 5-minute charts and 15-minute charts and hourly charts, when I finally got out of the truck, when I was no longer doing that job, and I'm trying to day trade, and I'm in front of my computer live as the data is going by, I'm thinking, wow, I can literally see the low forming here. This is the bottom. Well, I'm not holding that swing trade anymore. This is going to be the time I close it, and I'm going to double up. And what I was short in the position trade or swing trade, I'm taking that off, and I'm building up a bigger position on the short-term scalp or intraday trade I was going to take, which would have otherwise probably been like maybe 1 or 2 contracts of the bonds, something like that. I'm thinking, well, no, I'm going to collapse all the swing trade and use that margin to go heavier on this counter trend idea that I'm believing at the time was the bottom of the marketplace. And well, it didn't bottom. It went up a little bit, and I felt like I was going to capture like a huge run, and it rolled over, and I would not give up. I would hold on to it and convince myself, repeatedly saying, it's going to turn, it's going to turn, it's going to turn. And it turned. It turned right into a losing trade. And I had a bigger position on than I would have if I would have just not done what I did there. So I was making mistake after mistake after mistake, and it created confusion. And it was one of those things that also caused me to then quit, which was just me temporarily putting a rest in, not doing anything, taking a couple months off and saying, yeah, I got to reset, because I got to figure out what it is I'm doing to myself. And it's problematic. So you learn how to do this correctly by submitting to the process I put you through in mentorship, even over on YouTube. It's a top-down approach. You're not trying to go against the higher time frame order flow. I don't care who tells you what. It's much easier just to submit to that. And if you don't have a setup in that direction, you don't do anything. How easy is that? It's so much more liberating mentally, psychologically, emotionally. You're not expecting yourself to be an Olympic medalist. It's just trading. It's just the market's going to go up, it's going to go sideways, or it's going to go down. That's it. Which one's it going to be? And you're looking for opportunities that really lend well to one of those circumstances panning out. And hopefully you're smart enough and experienced enough to know when it's going to be consolidating and going sideways, so you don't do anything unless you're an options trader, because you can sell premium in that environment. But if you're going to be looking at directional bias as it bullish or bearish, it makes it easier to hopefully ferret out consolidations, which is one of the benefits of being here, knowing when it's going to be sideways. That's a skill set that someone has to know, and they illustrate it, over and over and over again, because they have that experience. Most people out there don't have a lot of experience to be able to do that, number one, or communicate how to see it before it happens. But if you can remove yourself from those instances where it's likely to create consolidations, you won't get beat up and chopped up. Then hopefully you've removed that, like on the roulette wheel analogy I like to use, where you think it's bet on black or bet on red, and you got a 50-50 chance. You don't. You have a green that can pop up. So the consolidation is like the green. You don't know when that's going to come up unless you've been fortunate enough to be through the mentorship, and you've now gleaned experience with me teaching how to see when the markets are most likely going to be muddy or consolidated. So that way it strips away that green probability, and it brings you back to hopefully a 50-50 of, are you bullish or you bearish? And if you have a lot more things speaking through your technical analysis that it's one-sided, or it's easy to see one side versus the other, and it's a hard argument to make you see the opposite side of the marketplace where it's going to likely go lower, and it's real easy for you to see it going lower, but it's hard to see any justification for it to go higher, and it's not likely consolidate. You've basically said to yourself, I have now seen this through the eyes of high probability and low resistance liquidity. That's the hallmark of being here under my tutelage. You pick up that skill set, but it doesn't happen overnight. So anyway, I'm giving you a lot of history and old stories and such, and leaning on some painful memories. But these types of trades, I've already taught you how to do them in core content. Okay. I personally cannot submit to them as a routine because it doesn't fit my personality. I can't do it. I can't do that type of trading consistently with a mindset that's just comfortable. I just can't do it. I can't. So I'm trying to be honest with you and tell you what works. So that way, if you can do these types of things personally and it fits your personality, then you will fit like a glove in that type of environment. But I can't make someone that's very, very astute in lower time frames look at this type of framework and say, wow, that's really what I want to do. But the important factor is this same logic and framework works on intraday. So that's why I teach it on intraday charts, because everything I just outlined here, if I just change the labels when they're not really anything but what they are here, the left chart is a daily chart of the bond market, continuous front month contract, and then the right chart is a 4-hour chart of that same market. If I change the labels and call them 15-minute and 5-minute, it wouldn't confuse you. It wouldn't even mess it up anything. It wouldn't change the logic one bit. That's the beautiful thing about it. Once you understand how price is fractal, you don't have to. And this is one of those big epiphany moments where if you haven't experienced that yet, it's amazing, because you might like this type of framework where it's swing trading and longer term position trading, and you may do it and you say, well, I'm getting better at this and I can see setups happening on an hourly chart. Let me just start messing around with that too, in addition to my swing trades. And then you start saying, oh, wow, I can see more setups. And then you start thinking, well, let me do a little bit more work in the lower time frame. And then you discover, wow, yeah, I started as a swing trader. That's what I did, but I outgrew it quickly. Once I realized what I was looking at and how it can be refined to smaller time frames, and it's a plethora of setups. It's just over and over and over. In the lower time frame, 1 and 5-minute chart, there is a setup every single trading day. That does not mean your setup is going to occur every single trading day, though. Let me say it again, because it probably went over your head. Every single trading day, the 1-minute and 5-minute chart is going to give you a setup that you can clearly understand based on the things I teach in this core content. But it does not mean that every single day your personal favorite setup and framework is going to provide that for you every single day. There's going to be something that you recognize, but you have to have the maturity to say, this doesn't really fit what I'm looking for. I'm going to watch it, I'm going to observe it and study it for experience sake, but this doesn't mean I have to push the button and go into a trade. That's maturity, that's responsibility, that's self-control. That has to be earned and learned and honed over time alone, because I can't be there with you. You have to exercise that on your own. And that is very difficult for many people. Many people, mostly the males. Okay. Women tend to be a little bit quicker when it comes to being more responsible and not so gambler type mentality where they just got to go in there and do it a lot all the time. Men generally feel like they got to grab their club and go out there and act like a caveman and plunk something over the head every single time they sit down in front of the charts. These candlesticks are not nails, okay? And you're not holding a hammer with your mouse. You're not clicking on every single one of these candles like a hammer and you're trying to hammer it down like a nail. Okay, that in your mind, subconsciously, that's what you're thinking. Oh, that looks like a nail. Let me hammer that. Let me hit that. Let me hit that. It doesn't work that way with a female. Ladies tend to be like more objective. They're they're more patient. They tend to look at things a little bit better. And that's why I personally believe women make better technical traders. Now, let me roll that back for a second. Men tend to be better competition traders. Why? Because they're hardwired for that. Women aren't into that measuring contest. Men tend to reach for the idea that I'm bigger, I'm stronger, I'm faster, I'm able to do more because I'm an alpha. That's the mindset of a man. Where a woman is more like, well, there's a smart way to do this, and I'm not going to do it any other way but that one. So I'm going to do what I'm going to be required to do, and hopefully nothing more, and be efficient about it. And I'm not going to try to drive myself crazy by doing it. That's what I've learned over the years with teaching male and female. And there's advantages to both. And I'm not saying that one gender of a trader, and I hope I can talk like that here. I'm not saying that a male trader is superior than a female in any one particular way. I'm just saying that from a mentor's perspective, I've seen that women tend to be much more detail oriented, and thereby making them easier to get to consistency because they're rule based and they're much more responsible. I think it's maybe a more of a paternal thing that it's built into them. They're hardwired to be looking after, a child. In many ways, you could look at this development of your career as your child. You're developing, you're nurturing this inner child that you want to see become a profitable trader. And maybe that's too philosophical, but that's the way I like to internalize it. Men think of it as, I'm going to go out there and beat the daylights out of something because I'm not going down. I'm not losing. I'm not going to be taken over or devoured. And I need to eat. So I'm going to go out there with my club and just beat its brains out, and I'm going to win. By hook or by crook, I'm going to force a victory from the markets. And that tends to be the reason why they blow out their accounts quicker. Okay, men generally will blow accounts faster and more times over than the female will. The female, they may do it once or twice, and then they're like, okay, I've learned my lesson. Let me do something different. What am I doing wrong? Men, I'm a perfect example of that. I did so many accounts in the beginning where I just didn't care because I knew I wasn't quitting forever. I just felt like I had something that worked at that time in the 90s, and I would push, and then I'd hit a wall, and then, okay, well, I got to go back to square one and figure out what I did wrong there. Waste a lot of time. So the man in me, the caveman mentality was, I'm going to keep doing this, okay, until I figure it out, because I didn't have someone sitting down with me explaining, this is problematic, you don't want to do that. I had to learn those things and lose lots of money, waste a lot of time, go through grief. I had to go through all that stuff. And that's the benefit of learning from someone, not just me, anyone that's been experienced at anything, the problems and hardships that come through that. This style of swing trading presented the most for me. But I'm thankful for having gone through those things because it made me a better trader on the lower time frame, because I understand, I can respect the logic that these frameworks provide. And in fact, that's what I'm showing you. So when we do commentaries and I'm saying on the daily chart, this is what I think it's going to do, that's the benefit of having been a swing trader in the 90s. When 1992 started, that's what I wanted to do. I wanted to be a swing trader, position trader, and that's all I wanted to do because I thought that I could put a trade on one time and maybe 2 times a month, and that's all I got to do. Wow, that's great. It didn't work out that way. Well, that growth in learning curve was assisted by all of the failures and the epiphanies that I collected going through forcing myself to be a swing trader, and then dropping down from swing trader and saying, no, I'm more really equipped to be a short-term trader. And I did short-term trading, and it was good. I did all right. But then I realized that these same patterns that I'm looking at on a 4-hour and 1-hour chart, they're forming on a 15, 5, and 1 minute chart. So if I lower my expectations in the number of pips and be more diligent about where I'm trying to get in and where I'm trying to get out, and just think of it as like surgical strikes, I thought to myself, wow, on these lower time frames, 1 and 5 minute chart, I could still get 3-to-1, 5-to-1 reward to risk gearing. I don't need these higher time frames to get that. When I was thinking, because the books were telling me you need to trade on these higher time frames to get the best R multiples. And that's not true. Because everybody in the book world, the writings of books and course creators, until recent years, they've always, and even the guys over there at Goldman Sachs and such, they like to call these lower time frames noise. There's no rhyme or reason. I can't make it work. Yeah, because you can't make it work doesn't mean it's not a logical time frame. I'm showing you masterpieces of precision on a 1 minute chart. Even in the 15-second chart, it's all there still because it's being controlled. If it's not being controlled, if it was all random, these things wouldn't repeat on all these time frames. So don't wrestle so much with, I don't know which one I need to be doing right now. Start with the highest time frame and start working your way down, and you'll find your comfort zone. That's the way it works. That's that process I put everybody through. You have to go through that. If you don't do it that way, and you just go in what you think you want to do right away, or you want to go into day trading because you see me doing it, or scalping because you see a lot of setups. A lot of setups in the hands of the uninitiated just means that you're going to blow your brains out quicker because you have in your mind unlimited ammo. When you're not going to need all the other ammunition after the first or second or third bullet because you're going to blow your account with your brains out. Okay? Because you're not going to know what you're doing, and you'll be trying to do much of the wrong things just more frequently. That's why it's important for you to understand that I teach you tape reading with a lower time frame to teach you a understanding and rhythm of how these markets deliver price based on time and price. And then those characteristics will repeat and be seen on higher time frames as well. It just requires a lot more time for them to pan out, which not everybody, like myself, are easily paired up with from a personality stance. I just can't do it. I tried very, very hard to do it, and I couldn't bring myself to do it. Regardless of what my analysis shows you with the commentaries, I can call the markets on these daily charts. I can say where it's going to go. I can tell you when it's going to move, all those things. Okay, but that doesn't mean I want to be this style of trader. But I don't convince or try to convince any of you not to be this style either. Okay, simply because I don't go in and show you setups and trades and entries with this style doesn't mean that you're not taught that in the core content, because I've already done that job of teaching you the rules and the things you would look for. The disconnect that you probably feel is that you aren't bridging the understanding that I'm showing you with these lower time frame charts that repeat over and over again, and with you going into these lower time frames as well. Just lose the time frame descriptor. Stop leaning on that as a important factor right now, because price is going to be the same on all time frames. It's going to deliver the same way. If it's controlled, which is what I'm promoting to you, to understand that these markets are absolutely manipulated and they're controlled and they're artificially controlled until they're manually manipulated with intervention from a man. Okay, a person literally goes in there and does something and reprices. But majority of the time, it's autonomous. So if that's the case, it should not be a surprise to you that every time frame has these repeating signatures, because everything on these time frames is being referred to by that algorithm, which is why I laugh when I hear people say, yeah, I'm going to write an algorithm that's going to do what IPTA does. No, you're not. You're going to find logic like this, and you're going to write an algorithm that looks just for that. But you're not going to write an algorithm that does the job of IPTA, because it's doing it's so complex. That's why I've said many times, I have certain things that I have identified that when the markets go into these algorithmic profiles and they deliver certain signatures, that element is what I was able to create a language for. But there's other things that I was shown that I cannot bridge. Not because I'm not allowed to teach it. I just couldn't. It's so complex. There's so many things that it's doing mathematically and time-based that I couldn't take that logic and find a way to show you in a chart, because there's just no way for me to see it. There's no way for me to know when it's going to happen, because it's too complex and I didn't spend that much time with it. The time that I had with looking at it and understanding what was being presented, that only afforded me what you have here that I'm willing to teach. And you only need one of these things to do well. But the problem is, you have to be here long enough to figure out what it is that makes sense to you personally. Is it a time frame that you like, that feels comfortable with your personal life, that your business or your employment or your family life is allowing you to do? That's important too. And then once you find that out, then you got to go in and figure out what model you're going to use that works well with those conditions and time of day, if that's going to be a factor. If it's going to be swing trading, then it's not so much a thing of time of day. It's just a matter of using limit orders and stop orders, and that's it. That's how you get in there. And it's all explained in the core content when I'm talking about these particular ways of trading. But I've had fun, obviously, giving you these frameworks, and there's obviously infinite frameworks that you could come up with. And hopefully they've stimulated your ideas on how you can say, oh yeah, I can take this and plug that in with this, and I can see how that forms. I can see it happening. When those things come together, I've seen that before, and it happens a lot. It happens every single week. It happens a couple times a week. It comes maybe, multiple times on a lower time frame chart in the same day. So when you have these things that repeat and you can gravitate towards it, don't resist it, because it's more likely that your personality is leading you to what you're supposed to be focusing on individually and uniquely. That's yours. That's your model. And it's such a hard thing to grasp when you're coming in as a student and you feel like this sounds like a cop-out for a lazy teacher, when it's something that I resisted and thought that I could overcome. And when I realized the importance of, well, what worked for me? Nobody sat down with me. I had to figure it out for myself. So by figuring it out, what fit me, that's the main thing. And it was confirmed when I heard Larry Williams talk about, and his son wrote about also, which was really kind of like him parroting what his dad already said. Not to diminish the importance of his writing or anything like that, but the idea of involving your personality and then plugging that into what you're trying to do as a trader. Because whether you realize it or not, if you haven't traded with live funds yet, if you ever decide to trade with live funds on your own decision, once that occurs, you're going to tap in to psychological and emotional things that you were not able to experience while going through your development and demoing. Because now you've equated winning and losing to a monetary loss or gain. And initially, that's going to create a lot of fear and anxiety and just nervousness. And performance anxiety is normal. That's why I teach, if you do go into live fund trading, you want to do it at the smallest level possible and gravitate towards adding a little bit more each time until you realize that everything you're doing in a live account, you've been doing in a demo. And while it's not indicative of future results, anything you've done in the past ever, whether it's live fund success or demo trading success, whatever that is in the past, doesn't equate to it's going to happen the same way in the future. That's where the risk is always. We are all losing traders. As soon as the trade gets put on, that trade is a loser. You have to trade your way out of it. And most people can't, because they're looking at that thing that's saying they're down this much. They're down below the dealer spread, or they paid their commission cost and it moved against them a little bit in drawdown. And they think that equates to, you're wrong. This trade's going to scream against you because you're looking at the money and you've never been there before. And that's a weird feeling. Take that idea and place it into day trading, and it's not so big of a deal because there's another setup that's right around the corner. Or short-term intraday trading. If I have a losing trade, or if you have a losing trade, that's likely to create another one. If you place that logic into swing trading, you waited how long for your setup? And then you put the trade on and you start feeling that adversity. What's going to happen? You're going to want to get out of it. And then what happens if you do get out of it and then it moves in your favor? You're going to have regret and remorse. And that sucks. Or what happens if you hold on to it and you think, I'm going to open the stop up a little bit more because I'm probably wrong about where my stop is. I'm committed to the trade idea otherwise. You move your stop and it hits your stop and knocks you out. Then you're going to have remorse and regret because you broke rules. Then you got to wait for a new setup. Who knows how long it's going to take for your model to realign itself and give you that daily chart setup. So you can see, it's, to me personally, it presents too many things that are problematic for my personality, because I have lots of solutions and opportunities that I can find solutions in because I'm more nimble on these lower time frames. It doesn't mean I'm superior, doesn't mean I'm smarter than everybody else. It just means that I figured out enough to know that I can't do very well in certain styles of trading that I can do in others. So I gravitate to where I'm the strongest. And that's what your pursuit's going to be in your own development. And I try to do my best. And then maybe I'm not doing a good job of that because it sounds like I'm talking you out of this style of trading. And I don't want any of you to see that or hear that in my delivery here. What I'm suggesting to you is the fact that I don't do a lot of this type of trading and giving setups and such, that's not entirely true, because that's the basis. I'm using swing trading model to give you the analysis on the commentaries daily. I'm giving you that logic. I'm also giving you the short-term trading logic and things in the commentary. Because sometimes I'll say, I think we're going to go to a longer-term move. Well, that's swing trading. If I don't have a long-term horizon, then I'm looking for short-term trading. I think it's going to go here or go here, like we did this week, where I said, euro's going to go up and go into its imbalance, and dollar's going to go down to its imbalance. That's short-term trading. Okay, so because we don't have a lot of swing trading structure in place right now, I had to lean on what? My experience as a short-term trader. And then I told you what dollar was going to do, and I told you what euro was going to do this week, and it delivered. Okay, those skill sets are in my experience, but I still prefer intraday day trading. I prefer that because I'm comfortable with it. It's important for you as a student to understand and hopefully appreciate my honesty in this regard, because I'm allowing you the greatest benefit in your development to find your own way. And once you have it, it's rewarding. There's no way for me to just kind of like articulate it in words, because you feel complete. You feel like you've found yourself and you found your way, and you're not going to be easily talked out of doing that once you discover what it is, which is important. You're going to have the wherewithal to hold on to it when it has short-term adversities, because every style, every trading framework or model or analysis concept or trading plan or black box system, they all have inherent weaknesses. And largely it's attributed to the operator, you, the trader. You're going to overthink something, you're going to hesitate, or you're going to act too quickly. And that's going to be the catalyst for you thinking differently about the idea once you get in it, maybe collapsing it before you should have, or holding on to it too long before you should have exited before you did, obviously staying in it too long, or just doing it wrong because you're impatient. Those are the things that are going to creep into every person that trades. Every person that trades is going to have that. There's no way around avoiding it. That comes with experience. That's why it's important to manage risk very, very well, impeccably. Because if you don't do that, you're not going to give yourself the chance to get the experience, to refine yourself and get maturity, and to be able to know what it is to avoid and when to really let your model shine where you feel like the odds are really in your favor. Doesn't mean you're going to be getting the maximum result. It's just by experience that things are really sweet right now because of the technicals, the structure, the seasonal tendency. You're firing on all cylinders. You're in sync with the marketplace. You feel like you absolutely are tied in, and you dial in on the algorithm. Those are times when you want to use maximum leverage. When it's not like that, you don't ever use maximum leverage. And all those factors come together over time. And it doesn't happen in 4 months, 6 months, 2-week boot camps, or even 18 months. This is a career experience level that comes. And why some of these folks that come into this mentorship come in with the expectation they're going to learn how to do amazing things right away because they watched the videos, or they wrote some things in a journal and, I did some journaling. No, that's dabbling. When you have put time into doing something that is refined, and you're back testing and you're looking at how it fits your personality, the folks that throw in the towel here, I guarantee you they're trying to do something they know in their heart of hearts isn't lining up with them personally from a personality stance. They're trying to do something, and many of them are trying to be day traders when they're really not equipped to be day traders. So they assume, I'm trying to do this. I'm watching this kill zone. I'm watching these SMT divergences. And again, they're trying to do something in the lower time frames. And because they think because they're in front of their charts, they have time to be sitting there, the markets better damn well give them their setup. And it better be exactly what they're looking for when they have zero experience to be able to lean on any of that. That's a bitter pill. But I've never shied away from that. And I've said that before any of you joined. I said it in the tutorials over on YouTube years and years ago. 10 years ago. Over 10 years now. The things I'm saying right now, I've already said those things in Baby Pip's days where I was making videos and bloviating about things that's going to be expected of you. But many of you, if you were back at those times and years when I was teaching like that, wanted to put your fingers in your ears because that's not the cool thing. You wanted to hear the get in, where's my target going to be? How much money can I risk and make? Okay, that's the things that everybody wants to do. But the real secret to success is figuring out who you are. And that means that some of these really cool approaches to trading that you think you might want to be involved in, whether I'm teaching it or whether you purchase it or you learn it from someone else, they are cleverly disguised impossibilities. And I discovered that. And it's not because I'm not good or I just wasn't smart enough to figure them out. No, I was trying to push a square peg into a diamond. Like I'm trying to make something be something it can't be. And then once I started realizing that I was the one creating the problem for myself, it sucks when you have to admit it. And that was the only good thing about my coming up is in this solitude of my pain and suffering of developing, I didn't have to turn to somebody and say, yeah, F that up. I've been effing it up the whole time. Okay. It was just me just saying, you know what, I'm going to try something different because what I'm trying to do right now isn't working. And that is scary. That's scary. Admitting it, number one, coming to the conclusion that, hey, you know what? I've been the problem all along. And I've been trying to divert the responsibility on everything but me. And then once you do that, I guess in a lot of ways, I've never drank alcohol, got drunk or anything like that, but I guess in a lot of ways, that's what they mean when they say you are an alcoholic. In the first stage or step to getting better is admitting that you have that problem. Well, as a trader, if you're doing things over and over and over again and you're addicted to the stimuli, which is very, very, likely. That's why I like Alexander Elder's book, Trading for a Living, because even though he talks a lot about alcoholism in that book, I could relate to that because the majority of my family members, most of the men, were alcoholics. And that was one of the reasons why I never drank alcohol, because I saw what it did to their lives and how nasty they were and unhealthy they were and just mean-spirited. And if you look at anybody that gets drunk, majority of the time, if they're male and they're traders, they're usually megalomaniacs and they wear beer muscles and they think they can leap over tall buildings and can do anything they want and stop bullets with their hand in front of them. They can do everything. But when reality hits them and then someone asks you, hey, can you prove it? Can you do this? They can't. They can't do any of those things. And they become very toxic publicly. Well, I didn't have that problem being in a state of solitude where no one knew just how bad the pain was and no one really knew how good the victories were. So it was a matter of me being sheltered from all that because I didn't want to feel vulnerable. And my family members already shown me early on that they were not going to be a support structure for me. So I just cut them off. When it came to trading, I didn't tell them anything I was doing. I just kept it private, which made it very difficult as well. So if you've had the experience like this, it's normal. It's normal to feel lost. It feels bewildering. It feels like there's no support structure around you, and it's easy to complain and say, well, no wonder I'm failing because no one else is going to help me out. No one's encouraging me. You need to do that with your journal. That's the reason why I teach you to use a journal. You're literally encouraging yourself and documenting your progress so that way you can see that growth over time. And then when you look at it, really pay attention to see where a mile marker was in your growth. And then look at another mile marker of growth and contrast the two understandings that you had as an epiphany. And then discover by measuring the amount of time between that moment and when you learn something else. See, it's easy to come in here and feel like because ICT's teaching it, it's going to be so much easier when that's not the case at all. The only thing I'm doing is shortening your time frame doing all this stuff, because I'm taking you right to what you should be doing and not wasting your time. Even though it feels like it's a long time to learn this is a lifestyle, folks. Like, no matter what you do in terms of learning how to trade, I don't care who's teaching you. This is the way it is, folks. This is it. This is where the rubber meets the road. If you want to be a trader, you didn't make that decision to be a trader for a couple years and stop. No one ever does that. They say, I'm going to be a trader, so I'm going to live a profitable life, consistently trading the markets and living and sustaining myself through the markets until I get rich, if that's going to be the outcome. Or you just do this as a career. But so many people come in here thinking that this is going to be a way of learning how to be a good lottery trader, where they can do one big run real quick and they don't ever have to do anything ever again. You might not think that's what's going on, but many of you, if you really give it some thought, that's what you've basically attributed to this whole process. You want to come in real quick because you know it's already hard, but you don't want to admit it's hard. So you come in and you have to wrestle with all these ideas of what it is that you have to figure out for yourself. Guess what that does? That places all the responsibility on you, not your teacher, not your spouse, not your coworkers, not your boss, not your dog that ate up the books that you've been taking notes in. It's on you. And man, that's scary, isn't it? It's all on your shoulders. Think about it. There is no answer in some mechanically driven system, because you still have to decide whether you're going to take that trade or not. Are you going to execute on that trade that black box is spitting out? Or that signal service that you feel like, I can't trade learning how to do this on my own. So I want to find someone that's successful. And I'm not beating up on any of the students, because I have students here from 2016, 2017, to every year that I did a mentorship enrollment. Every individual user group, there's a few traders that are coming forward on the forum when they become charter members, and they'll say, is anyone in here consistently profitable that's willing to give me signals, and I'm willing to pay you for it? Now, even if that's the case, and you've come to the conclusion that that's what you want to do because you can't find your own way of doing this, you didn't remove yourself from that equation. You're still a potential problem. Think about this now. This is where responsibility lies. Let's say that you subscribe to someone, whether it be my student or someone else that's operating a signal service. Okay? Regardless of whatever that signal service, wherever it comes from, who cares? Okay, that's not the important thing. The important thing is, if you have committed yourself to taking someone else's advice and analysis and attributing that as that's what you're going to do, are you going to take every single trade? I mean, if you are, then okay, great. That's what's going to be expected, is what you should do. If you're going to follow signals from somebody else that's out there that's proven themselves successful, which is important. If you're going to be buying signals and paying for signals, they should give you some time to prove that. Don't show, oh, I made trades, in the past, these are my winning trades. No. My students and anyone else, if they're doing signals, they should have no problem giving you at least the very minimum a full month of walking it forward, saying, okay, here you get a free trial for a month. This is what I see over the course of a month. Maybe you'll get a better view of it that way. If they don't want to do that, then they're not worth listening to, or let alone even paying. But what happens if you get a signal from them? Are you going to look at the chart and see, what do they see? And then are you going to trust what you think you understand about the marketplace? Or is it going to convince you that they did the right thing? Or are you going to second guess what they've told you in terms of a signal because you've been exposed to something here and maybe someone before me that taught you things, and you're going to talk yourself out of that trade? No, I'm not going to take that one. That one don't make any sense. I'll wait for something else. And then the next signal comes that you paid for. Then you take that one. That one loses, but the one you didn't take wins. Who's the problem? It's not the signal provider. It's you. But you won't see that. You won't see it that way. And that's usually the personality of the people that come into my mentorship and quit. That's the character flaw. That's the number one character flaw that they have. If I could lump up everybody that came to me and said, I'm ready to be taught when they really weren't, and they quit, that's the number one reason. The second one is they didn't have the financial capability to continue all the way. They thought they would be able to make money from month 1, 2, 3, 4, whatever, and then pay for it through trades. That's the two top reasons why they quit. It's not because this stuff doesn't work. It's not because I don't prove before the fact that the markets are working this way and where it's going to go and all that. They all see that. But they put blinders on and they say, okay, that's him. That's ICT. Of course he knows how to do it. I need to make money, or I need to be able to do this right away. And they have these unrealistic expectations with no personal responsibility. And that is a loser in every shape of the word, every way you want to slice it. It's going to be the same outcome no matter what they do. Whoever teaches them, whoever gives them a resource, they're going to be a losing trader because they have no personal responsibility and they have not made themselves trainable. They're going to be the problem. They're always going to be the problem. And I can't fix that. No one else can fix that. So that's one of the benefits of having done these mentorships since 2016. I have learned to just let them go. When I used to be upset, I used to be really upset when a student would just cave in and say, I can't do it anymore. I'm quitting. This isn't working for me. And some of them would say, I don't think this stuff works. And they wouldn't say I was a fraud or a scam. They would say, I just don't think this stuff works. Well, it's kind of like what you're saying, but you're trying to be polite about it. But when I would ask them, can you show me what you did? Like how would you answer that? If you're saying that you can't make this work, what have you done with it? And many times I wouldn't get a response at all because they know by sharing with me what they tried to do wasn't even what I taught. And the ones that were open with me and showed me what they were doing, many times they came back and they said, look, I realize I'm messing this up myself. And I appreciate you having asked me what it was. But when I got really large and there were so many of these people coming in, I don't have the time to go and run and save everybody and figure out their individual problem. In the first group, the second group, I could do that. It's just too many. So I've learned to just let them go. And it still hurts a little bit because I know they gave themselves really no opportunity. And they didn't give me the opportunity really to show them what they can do with this information. They just had unrealistic expectations. But all of you listening to me right now, you're at that last step. Like you're there. Some of you are already charter members now, but some of you are, getting ready to make that charter payment. And then that's it. There's no more money. So that frees you up to no longer worry about that hurdle. It's done. It's behind you. But you still have all these other things I've been talking about in this video where the personal responsibility rests in your hands. There's a lot of things that you're responsible for. In a weak-minded individual, it's easy to say, oh, it's that guy that taught me's fault. He's holding things back. That was some of the things that the first group used to say. Oh, you're holding it back. No, I'm not. I'm not holding anything back. I'm blasting your face with a fire hose, and it's hard to drink from that. So you have to slow it down and take small bites and literally digest this stuff over time because you're not going to retain it. It's too many things coming at you. And look how many videos I put out. That's another reason why I have to slow down the delivery because you have so much content. You got to go through that multiple times. If I keep giving you hour-long videos like this every single day, it's hard to keep caught up, number one, to all the things you have to study in the core content lessons. Then you got to still maintain what's going on right now in the commentaries because that's what's happening right now, what's applicable right now in the marketplace. Not everybody has that time. Like that's a reality. You got businesses, you have families. Not everybody has an ability to sit down every evening, and block out an hour or so for ICT. Okay. You may love me, you have respect for me, and that's great, but you still have a spouse and you still have children who you love more than me, hopefully. And you have a job or a business or you have school, you have other responsibilities. I'm aware of that. That's the other reasons why we're slowing the pace down. It's not because I ran out of things to talk about. You have a lot to work with. And then now I can go in and do that weekly video on the other side of March, because if you haven't made a note in your calendar, the entire month of March, I'm not making any videos on YouTube. I'm not making any videos or posts in the forum in this mentorship. I need the break, okay? But on the other side of March, in April, you're going to get one weekly video. Most of the things I'll be doing is through the forum. I'll be doing posts. But from YouTube, you'll be getting a lesson through there too. You'll know more about what I'm teaching on YouTube because you've been here. But I'm putting a video up on YouTube on Tuesdays and Thursdays. So you'll have a weekend commentary from me, and you'll have a Tuesday and Thursday video that you can participate in on YouTube. So you'll still have 3 videos a week in April going forward until I'm done doing whatever mentorship I want to teach on YouTube. I'm only going to do a few months there, probably like 3 or 4 months, and I'm stopping. And then in the fall, we'll pick up a lot of cool things going on in the forum here. That'll be all like charts. All the commentary will be in the chart, and it's easy for me to just throw a watermark on it, and then boom, there it is. It's done real quick, and I'm done. I'm not processing all these videos. That's a lot of time, and I'm looking forward to having all that time back in my personal life. But we're not done teaching. I'm not done teaching. There's a lot of things I want to teach, but I have to give you time. Like this 2021 group that just made it through and getting ready to become charter members. You're the last of the Mohicans, man. Like, that's it. And I want you to take time to go through the commentary and go through all the lessons again this year. Go back through it again. That's why we're slowing the pace down. So 2023, you'll be really equipped to be able to see the benefit and the value I give, even with the lower pace. It'll feel like, wow, you're teaching better now. When it's not that I'm teaching better, it's just your understanding has increased. And I've always talked this way. That's why if you go back and look at the old commentaries in months that are way back there, you'll swear that I edited the video and put something in addition to, because it's like, that wasn't there the first time. No, your understanding about that aspect or topic wasn't what it is now or where it will be in the future, because you're learning more. That's being a part of a community. And that's why it should be protected and not squandered here, but stupidity and sharing and selling and whatever. But while I have the energy to do it and constantly, present new things to you, you should be respectful of it and appreciative, because like I said, in the last year, I can feel changes in my body. Like I can feel like I'm slowing down, and I don't think that I'm an old man, but I can relate to how people at my age now, I'm getting ready to turn 50. I can hear, like when I listen to Larry Williams, like, I'm turning 80, and I'm doing this and I'm doing it. I'm thinking to myself, it's trading. You're not lifting weights. You're not doing anything physical. I can feel it now. Like, it's really, really difficult for me to bring myself to London Open. Like, I prefer to sleep now. And my day really revolves around a New York session. And I like that. That pace has really fallen into a style for me now. And I don't have a lot of need, where it used to be like an ego thing. It used to be like, I got to nail down the high of the day, the low of the day. I got to be in that London session doing that. I don't need to do that now. I'm just, I'm at a time in my life where I want to be enjoying as much as I possibly can while I can, and making a lot of memories, because I've robbed my family of that since 2016 doing this mentorship. So I've had to listen to a lot of things from my children saying, Dad, I love the fact that you're passionate about what you're doing, but I wish you would have been doing more with me and my brothers and Mom and those types of things. So I have to make time for all those things, and you have to make time for all that. And that's what we're going to be doing. We're going to be providing a lot more time for you to enjoy your life while you're still learning to be better at all of this. And my hopes are that, we'll be a really respectful community in the forum and encourage one another. And hopefully it won't turn into something that's toxic, because we have a lot of members coming in here shortly that are 2021. And I'm hoping that they will have a certain measure of etiquette when they come into the forum, because I don't want to have to be controlling a lot of, unruly people or excited people that just think they can talk any way they want to talk and it's acceptable here. I don't want to have that kind of environment. So, but I've jawboned enough tonight. I think I've touched on a lot of things, and because I didn't do a video yesterday, I didn't get a chance to vent, and I got a little bit off my chest today. And we talked about a lot of things tonight. I think that if you haven't given it much thought, obviously the things I've said tonight should be considered for you personally, especially if you haven't felt like you found your way. And this is a video where I've touched on things that were personal development hurdles that I went through, and things that helped me discover where my weaknesses were, where my strengths were, what led me to be the type of analyst that I am right now, where the setups are easier to see and more frequent for me to find, and they just feel like they fit perfectly. And I'm not saying that I'm 100%, I'm not, but I do better because I'm comfortable and I'm not trying to be something I'm not really equipped psychologically and emotionally to do, which is swing trading. But swing trading ideas is what I give you every single time I'm sitting down with you and giving you commentaries. I'm using that logic for swing trading and position trading and short-term trading. If I didn't have that skill set, I wouldn't be able to call the market or give you the commentaries that were useful and where the market eventually goes. So I'm proving that almost on a daily basis. But the short-term trading, or intraday trading, I should say, day trading, that's the part for you to apply and learn yourself. Because by me allowing you, and really, let's just be fair, I'm forcing you to do that. It forces you to discover on your own where you're likely to be best at, but using lower time frames for multiple frequent setups. And then saying, okay, I can see this forming on a 1 in 5 minute and 15-minute chart, and it does it easily. So what happens if I take that logic and scale it on a 4-hour chart in short-term trade? Boom. Some of you, that's going to be it. It's going to be like, that's where all the tumblers in the lock go in their position in the key terms, and then it's it. You're in there. You know exactly what you're doing. And that feels amazing. And for some of you that are trying to force this style of trading, and then when you go into lower time frames, you're like, wow, I see this. This is like, it's happening almost every other day. It's there. Boom. You found yourself. Okay. So a good teacher is a good teacher because they know what the student needs, and they know when that student is going to need it most. I try to be the best teacher I can be. But the students have to be teachable. And I've had lots of well-meaning people come in on the first month or second month or whatever, and they presented themselves as unteachable. And most of them quietly just left. A few of them would say, I don't think that works. I don't think this works. And we have members that are still active. And one of them recently in the past year posted on one of the user groups saying, I don't think these things work. Now, he didn't, or she, I didn't look to see who they were personally, but I allowed them to say their thoughts, and other members came in and kind of like tried to pick this member's mind. Like, what is this that led you to think that? And I felt it was a pretty good thread, because a lot of students would come in and say, well, what were you doing, and what have you been doing, and where are you struggling? And that's the kind of mentality I want this community to have, because I don't want them to look at and say, oh, look at him or look at her. She's saying that this stuff doesn't work, and let's wolf pack her. That's not what I want here. Okay. If someone's coming out and saying it, that might be their way of simply just asking for help, because that was one of the things I've discovered also working with so many different personalities and demographics and cultures, like folks that are foreign when they talk to me, like I used to be offended when someone say, hi ICT or hi teacher, which obviously is, showing respect. And that's great. I'm not asking for, people bowing down to me, but they're being respectful. They're looking at me as their teacher, and they'll say, I have a doubt about this. And I would like, what? Immediately, the American in me, the hardcore, what did you just say to me? When they say they have a doubt, I would take that as a personal attack. Like, I don't believe this. Like, I don't think this is true. When they're just communicating the best way they can to say they are unsure or confused about something and they need more understanding given to them. But their way of saying it from an American stance, me looking at that when they say I have a doubt about something, I literally went at one guy in the email. I was like, what did you just say to me? Like, what did you just say? You're doubting this? I could show you this. I went off, and they were like, no, I didn't mean it like that. What I'm saying is and I'm like, okay, and I apologize. And it was embarrassing because I had to learn that because of the cultural divide and language barrier. I didn't give it much thought because I don't have a lot of time, and the few things that I would answer in emails when I would get a chance to do it, some of the emails I regretted opening. I'm like, man, why did I open this email up? Because like either it would anger me or make me feel like I'm not even going to answer this person because they're being rude. When now I understand because of having done it, and I've learned to be a better mentor through doing all this, that sometimes it's very difficult for a student to articulate their hangups, their struggling point. They really don't know what it is to communicate. They know they're lacking something specific. They just don't know how to articulate what it is. And initially, in the first few years of doing this, I would look at it as, they're trying to be argumentative. And it wasn't the case at all. So I've learned, with so many different personalities and so many different age brackets, I have older folks in here that are much older than I am. And I have obviously the 20-year-old guys that, come in here too. But the middle of the road type of folks, 30, 40 guys, and gals, they're here too. But I try to do my best to try to be the answer for everybody here, but I've always been honest and said that I'm probably not going to be perfect for you. And I said that even when I was on YouTube. I am the person that you want to learn from, but the problem is I'm very expensive, and it requires you to put yourself through things that most other mentors aren't going to do that because they're going to distract you with other things to try to keep you paying. And I don't want to keep you paying. I want you focusing on your development and removing all the distractions and making it a personal experience for yourself. So that way, when you achieve your goal, I had a part in it, but you have all of the accolades. You have all the reward. You have all of the struggles that you've done yourself, and you went through all of that. And you earned it. So while I appreciate those individuals that show me respect and say, hey, look, I appreciate everything you've done. If it wasn't for you, I have been talking my whole life about these things. I've been teaching my entire life. There's a lot of folks that started listening but stopped. You still listen. You put the work in. You work towards this goal. So when you arrive and you get it, you earned it. You paid the price for it. You put the time in, and you did not let anyone or anything distract or deter you from it. And that's commendable, because I can tell you, it's hard. And for folks that are still going through it, you know what I mean by being hard. And for the folks that have found their way and they're profitable now, you can shake your head and smile like, yeah, it was hard, but I was worth it. And that's the encouragement I want. And right now, we have a lady from Australia. She's in the forum, and she's encouraging other folks. And for the most part, she's being received very well for doing it. And she's from the first group. So I mentioned during passing one of the recent commentaries where she shared a broker statement with me. And that to me, again, is encouraging as a mentor, because I have a lot of the men here, which have that caveman, I passed this, funded challenge, or I've done this with my account. I've made this much money in my account. I've done this much this year. I expect that from the gentleman. But when the ladies come forward and they're like, this is what I'm doing, I'm like, whoa, it's good. I love that. And I love sharing that with my wife. She gets a kick out of it too. And, it's just, my goal is to have a well-rounded community and not just the guys are killing it, because the ladies here are still doing very, very well as well. And they're just quiet about it. They're not trying to make a big deal about themselves. And that's what I like about Grazi. She speaks her mind. She puts it out there and says, look, the people don't get it because they don't put the work in. And that's the truth. And she's heard it since 2016 and prior to that, in the free stuff. And when you listen and you put the time into it and you focus on yourself, listen, folks, you got to be selfish. And there's nothing wrong with being selfish while you're trying to learn this. You can't be trying to be a weekend warrior where you're working all week to go out and spend your girl money or your guy money, okay, and live for the weekend. If you want this, it's going to cost. It's going to cost time. It's going to cost experiences with your family. You're going to have to sacrifice, but don't sacrifice so much like I did. And it's hard. I'm not saying I have the answers to all that, but I thought about it yesterday, in the few moments I had waiting for this guy to help me with tax stuff. Like, I'm coming to the end of all the aspects that are administrative and business and payments. All that. I'm so glad that's going to the wayside. Like, I don't have to worry about that anymore after another 2 months. And then it's just me being able to be me again. And you all get to hear me be myself here. Now, I'll talk on YouTube, obviously, but here I get to be me. And maybe these videos are too long. Maybe you don't like them when I go off and talk like this. But this, to me, is one of the benefits of having this mentorship, because I get something from having this mentorship. Even though all the payments are stopping, I still get something from it, because I get to talk to people that, number one, resonate with the things that I love, which are these markets, analysis, things that go on around the world. Like, I have an audience and a family member in all of you that I can talk to, and I can get these points across and not have someone staring at me, like stare through me. Like, what are you even talking about? Because that's pretty much how it is. Like, I have friends, and I have family members, and I have associates. None of them generally share the view about the markets like I do, like all of you do. Like you love this stuff. If you didn't love it, you wouldn't be here. And I take great pleasure in knowing that I have culled a community that has that perception of the things that I love most about this world, which is opportunity in the marketplace and the sharing of these experiences with one another. So I absolutely get something from this, and it's not just the money. And the money part, I'm glad it's going away, and I don't have to worry about that anymore. None of you will have to worry about it anymore either. But the community aspect, that's the part I look forward to. Like, I can't wait to not have to be doing all these things, creating videos and all that stuff, so I can engage. Remember how it was when I was on Baby Pips? If you were back then in 2010 and 11 and 12, like, I was in there every night posting stuff, making articles and stuff. I want to go back to that. I miss that. And I can create some really good PDF files for you, and it doesn't take me that much time to do it. And I want to teach that way. But for some of the remaining subject matter,